Hey, Nick. Hey, listeners.
Hello, Warwick. Hello, listeners.
Righto, Coxie. Hit me.
Why did the landscaper take out a mortgage?
No, can you hear my brain like
Yeah, I
grinding
can.
its gears trying to
I can
engage?
see.
Yeah, I don't know.
Because he wanted to plant his roots.
Oh, dear. G'day, I'm Woz.
And I'm Nick, sometimes Coxie, mostly Nick.
This is the Tradies in Business podcast, and we're here to share a bunch of tips, ideas, tactics that you can put in place to get change happening in your trade business right now.
If you're really lucky, we're going to entertain you with a few mum jokes and, more importantly, a bunch of fantastic guests that will educate you in all things you need to know about trade business. But we do promise to do it with a whole bunch of fun along the way.
I'm a self-confessed idiot, so strap yourself in and enjoy another episode.
It's pretty good and a quick.
I was on topic at least, in more ways than one. So, g'day, tradies in business, and those of you who are aspiring to be a tradie in business, welcome to another podcast episode. Coxie, I'm going to repeat what my wife said this morning. You're looking great in pink today.
Thank you. I'm bringing the dopamine to the podcast today.
I don't know if it's bringing me dopamine, but anyway, something that does not bring me dopamine is seeing my mortgage repayment every week.
Yep, I'm with you there. Unfortunately, I reckon every listener just groaned.
So hang in there, listeners, because we're talking mortgages today, but hopefully we're going to make you feel a bit better about mortgages and perhaps what you can do. Ryan Gair, welcome to the podcast, mate.
Thanks for having me, Wazza and Nick.
You're very welcome.
Now, Ryan, are you a hard G or a soft G?
I'm a hard G, I guess.
Hard G. Ryan Gair.
OG.
Okay.
Hey, how's
OG.
that? An OG?
Oh, geez. Okay. Look, I feel like I look a lot older than you. Maybe I just feel older than you, but
Well, I actually don't know what a hard G or a soft G is. I just threw out an OG, yeah.
Nice comeback, mate. As I said your last name, I thought, oh, geez, I didn't double check. Is it Gair or Jer?
It's Gair.
Yeah. So it's Aussie, mate. Of course it'd be Gair.
Yeah, it's a Scottish name, actually.
Ooh, okay. Well, that's Australian.
Yeah, it's Australian. Everyone's Australian. Whoever lives in Australia is Australian, in my view.
Now, Ryan, you were telling us just quickly before we hit record about speaking about roots, Coxie, and your joke. Man, there's just segues and tie-ins everywhere here.
I do a lot of research for these jokes so that you can find a segue left, right, and centre.
They have to land. Ryan, you live in the Big Smoke, but you didn't originally come from metropolitan Australia.
No.
Tell us a bit about how you came to be, well, incredibly fortunate to be talking to us today, obviously. But tell us a bit of your backstory as an OG, mate.
As an OG, yes. So originally born in the country, a little town called Fitzroy Falls, which is about 2 hours south of Sydney. We had a farm down there with 110 acres. We used to do livestock with sheep. We used to do strawberries in the summer and swedes in the winter. A lot of people don't know what a swede is. Looks like
choked on many a swede, mate.
Yeah, that's right. And then made the move to Sydney, and fast forward, don't have to go through all the childhood and whatever else. But now, obviously, and bore everybody. But now in mortgages and been self-employed for over 10 years. Family's always been self-employed essentially as well, so grew up around it too. And started a business by the name of Rate Money 5 years ago, where we specialise in self-employed lending and solution type lending for predominantly self-employed applicants.
Now, I like to complain about things sometimes, and one of the things that I've been known to complain about is how shafted I feel self-employed people are when it comes to credit and lending, and even just banking in general, to be honest, despite the fact that, and I don't have stats and data in front of me, and I've heard some numbers bandied about over the years, but self-employed like business owners, small business owners, make up such a massive part of the taxpayer base here in Australia. And we employ, as many or more people as the corporates as a collection. And yet it's so bloody hard for us to get a loan. What's going on there?
It's been a gripe of mine ever since I did get into lending, as I said, roughly around about 11 years ago, is how I look at a lot of the time is if you're self-employed, you're going to be the last person to sack yourself for someone's on wages. Also, as well, the way that I look at it as well is a lot of self-employed applicants have a lot larger deposit than a first home buyer. And just because they don't have all the paperwork together, a lot of the lenders decide to make them jump through multiple hoops and too many hoops where it says this is all too hard. I've been self-employed for 10 years. I don't have any defaults. I employ 4 or 5 staff and I pay their wages every week, but you're not going to lend me to buy a property or refinance my property.
And then charge you a premium even if they do give you a loan.
That's exactly right. So we created Rate Money on the back of looking after self-employed and being able to offer home loan products depending on where you are in your self-employed journey, to make sure that we meet all your finance needs, because obviously all self-employed people are very different. You know, it's very different to a PAYG person. They get their salary and that's what they get paid on a weekly basis. Whereas self-employed, we go through ups, we go through downs, and we can go through, you know, huge hikes of revenue coming through in the good times too, and being able to lend against that as well.
Ryan, what is it that you can do that the big banks, I'm going to say, won't do? I don't know. Can't. I think it's more won't.
Yeah, no, I'm glad, Nick. That's where I was leading into. So obviously with the banks, you need to have your tax returns. Now, we've just moved into a new financial year, and let's say 3 months down the track, a couple of sparkies out there, let's say they've picked up a couple of new contracts, and all of a sudden their revenue and their profit has gone through the roof. They can't actually demonstrate that to the bank, or the bank won't lend against that because it hasn't been in their current tax returns, because that was last financial year. So there is other solutions out there, which is called a low doc loan. And a lot of people out there think low doc or mid doc, oh my goodness, I'm going to get charged premium rates. They're going to charge me huge fees. They're going to rape and pillage me essentially. And it's actually all going to be too hard, and it's not going to be cost effective. And that's far from the truth. So when we created Rate Money, we removed what's called risk fees. Just because you don't have financials, you shouldn't get charged an exorbitant fee to take out a home loan. So a lot of lenders charge what's called a risk fee, which is a 1 or 2% premium of the loan amount that you're borrowing. And then they charge big application fees and higher interest rates. So we created Rate Money. Just because you don't have your financials, we're not going to charge you application fees. We're not going to charge you valuation fees like the bank. We're not going to charge you risk fees. Obviously, because we don't have your financials, or when you don't have your financials, there will be a slight premium increase on the interest rate, but it's nothing huge. It's around about 50 to 100 basis points difference. So that's what we do differently to the bank. 98% of our customers are actually self-employed, and 30% of them out of that 98% are actually tradies.
Of course they are.
So there you go.
Ryan, I'm really want to be clear for those who are listening. Not everyone's come across a low doc loan before. Can you explain more about the concept of a low doc loan?
Yeah, absolutely. So a low doc loan is, as I said, if you walk into a major bank, they're going to ask you for your current year's tax returns or previous year's tax returns, and some will ask for 2 years. How the bank then calculates that income is all different. Not with us. It's a simple 1-page form which you take to your accountant. You put down what your income is as of the time of that day as a guesstimate of what your income is of that moment, and your accountant simply signs that they believe that you can either make the mortgage repayment, or that's a considerable figure that you've put down which he or she agrees upon, and that's your income document. So you don't have to supply the tax returns, or if you've got trusts and you've got multiple entities, you don't have to go to the accountant and get all that paperwork and get someone to try and decipher it for you.
So you mentioned mid-doc as well, Ryan. I can guess at what that might be, but what's involved in that, and why how do I know what to actually do as a self-employed tradesperson? What should
absolutely. So a mid-doc is another word for a low doc. There's all different terminology out there. The biggest thing that I would say to any tradie, I'm sure there's plenty of dads out there that do DIYs on a weekend and try and fix their toilet or whatever it might be, and in the end they got to get the plumber out or to actually get a professional to come and fix the problem, then you're trying to do it yourself. I think it doesn't matter if it's a rate money franchise. We have 40 franchises around Australia. But speaking to a professional who can actually work with you and where you are in your current financial position, and then be able to explain, but also have a good strategy, short term, medium term, and long term, to make sure that you're reaching those financial goals is the best way to go.
Brian, there's lots of other entities out there that offer finance for self-employed people. What makes your offering different?
Yeah. So firstly, we live and breathe self-employed. So I go back to that stat. Everything we talk about, all of our home loan products, everything that we have built, from a low doc loan to a 1-year tax return product, is all based around being self-employed. All of our franchisees are self-employed. So they actually understand what it's like to be self-employed, right? Whereas you're going to a bank, no offense to the bankers, but they're PAYG. If they get your home loan approved, they get your home loan approved. If they don't get your home loan approved, well, I still get my wage.
Yeah.
So working with a franchisee and a local office to where that customer is situated is you get to meet them face to face. They actually understand what it is like to be self-employed. And also too is you want to reach that end goal, which is to get the finance set, because the customer gets what they want. And these guys are self-employed too, so they don't get paid until that loan settles and the customer's happy. So essentially you've got someone working with you, not I'll try and work with you, but if you're too hard, I'll just put it in the too hard basket.
So how is it that a company like yours is able to come across these kind of product offerings that banks don't necessarily have?
Yes, so I used to be a broker as well in a franchise network. And I had about 18 staff working for me back in the day in my brokerage. And I specialised in this low doc product as well. And the lender that we were using at the time decided to pull out of low doc lending. So we were roughly doing around about $70 to $80 million a month. So a lot of customers coming through our doors on that product just out of my office. So do you sit there and think, oh, my goodness, my world's ended, and cry into your beer? Well, I did that for 24 hours and then saw that as an opportunity. Well, this lender's pulled it out. They're writing $6 billion a year on this product. Those customers need to go somewhere. And we saw it as an opportunity to actually go, and we had relationship with funders, and funders are the ones who actually then fund that money out. And that's how Rate Money started. We created these self-employed products, which are exclusive to Rate Money, which then we franchise out and end up in the consumer's hands.
So you're kind of like a bank without being a bank.
Yeah, I guess you can say that. Yes, we can't say that we're a bank because we're not a bank, but yes. So we're what's called a home loan provider. Our funders are literally across the road from us, so we have a great relationship with them, and all of our products that we build are tailored around self-employed. It's all
Brian,
we
is it
want.
something that the banks then find threatening? I know, when we talk about the big four, I don't think they find very much threatening at all, to be honest. And there's got to be a point at which they stop and look at that segment of the market and wonder either how they can squeeze you out or what they can be doing within their own practices to create a similar offering.
Yep, you're 100% correct, and that's the thing. Is I guess the word of being constant with the same product offering. So you are right. The banks come and they have what's called market share. So they'll come in for a quick grab. They'll create a product which is similar but not quite there. It sort of hovers around the edges for their compliance and those sorts of things as well. But then they suddenly disappear again. So we would rather much be very consistent in the space in where we play in and create this is what we do 365 days of the year, then we'll create a product which isn't it but close enough to it but then we're going to pull out again in 3 months' time. So I think consistency is key, and then being able to have other products which you can look after your customer, and the length of that journey is more key than a short-term grab.
Ryan, I feel like with the changes in the economic conditions, I see a lot of marketing from banks and brokers about chasing a better rate and turning over your loan and renegotiating and all that sort of stuff. And I think there's a lot of people who are very skeptical about changing. And look, I think a lot of people are resistant to change. We certainly see that even just getting people from listening to this podcast to booking a free session with us to find out if we can help them and changing how they're currently running their business. Changing a mortgage is it feels like a big deal to a lot of people. And I think a lot of people are like, is it really worth it for, what am I going to get, a 0.1% better deal or something? And then are they going to, there's the fear that if I do go and apply and I change, and then the bank changes the product or you guys change your product and now I'm shafted anyway. So is that a real thing, or is it just fear amongst people like we see here at Tradies in Business?
I don't think it's a fear, to be honest with you. I mean, it's completely and utterly understandable. I mean, it needs to be viable to refinance, and you got to explain to your customers, we're going to be saving you X, right? And what that X is that going to be a real financial gain for you? So does $50 a week mean a lot to you, or is it worth going through the hassle or not? But the other big piece of it as well, and you got to be open and honest about those conversations. You might be saving your customer $2,000 a month, and then that's definitely worth refinancing. I mean, what's that monetary position that's going to effectively change your day-to-day living and help? But the other big piece of it is it's not always just about the interest rate. We deal, as I said, with 98% of our customers are self-employed, so they might have a tax debt, right? Okay, I need to refinance because I've got to pay back the tax man because they're about to charge me exorbitant fees, or they're about to put me into voluntary administration, which is happening as well. Or we've got, truck debts, or we've got, van debts, personal loans, business loans, all those sorts of things that are now getting a little bit too much. Can I consolidate that into my home loan? Well, the answer is yes. We can do those sorts of loans for customers at residential rates. So it's not specifically always just refinancing your house. It's about looking at each customer's whole position and where they are and tailoring that home loan to suit their needs. And it's about being able to educate and having a chat to a lot of those self-employed people who don't know they can do those sorts of things. They're like, I didn't know I could refinance my business loan. I didn't know all of a sudden my truck loan being $100,000, I've only got to pay, I'm using this, don't quote me, but I've only got to pay $800 a month instead of paying $3,000 a month. Yeah.
Yeah,
so
I think
that answers that.
Sorry, mate. I think it's that awareness piece. Like a lot of industries, banking and lending seems a bit complicated and mystical. And I guess in some respects, it's a bit like what we talk to trade business owners about. That as a plumber or electrician or a builder or a landscaper, whatever trade you are listening to this, you know your trade, and it's easy to assume that other people know about it as well. The reality is consumers don't know about the trades, what's involved in a quote or the job. And so costs and stuff like that can be a bit of a mystery to consumers. And I guess, to those of you listening to this podcast, if you think about lending, you're a consumer. Most of you don't have a finance background, and that's part of the reason you got into the trades. And so to understand what the options are can be a bit mystifying for a lot of people, Ryan. Is there somewhere people can go to actually educate themselves on this stuff? Because I think a lot of people want to take more control, but they probably lack the trust in talking to the product providers. And I'll put myself in that basket as well. I wouldn't go to my bank and say, oh, what's the best deal for me at the moment? I know what they're going to tell me, and it's whatever's best for them. So where do we go to school ourselves up, Ryan?
Yeah, so there's two ways. There's one, speaking to an independent broker or someone as well on the other side of that, which I will use Rate Money, is someone who specializes in that self-employed lending space. The upside these days, there's so many bloggers, There's so much education out on Google as well. I mean, if you do have the time, this is the problem, is a lot of the time being tradie, small business, you got to do the paperwork. You've then got to go and do the jobs. Then you got to go home. You've got the kids, you've got the wife, or the wife has the husband, whatever it might be. I think as well is one, without a doubt, you need to have a fair understanding of what your home loan is and what you're getting into. There's no doubt about that. But I really do believe too is feeling comfortable in the person that you're dealing with, and they're able to give you the direct answers and be able to answer your questions in a professional manner and quite directly as well. I'll use it on the other context is if I've got, and I just did, I've had a plumber come out to my place today. I've got a problem with my pump. I know him. I trust him. He's done a few jobs for me. I'm not going to go and educate myself on that. Is he right or not? I feel comfortable with that professional in the answers that he's given me, if that makes sense. I'm a big believer in speaking to someone, actually getting a gut feeling. Does this person know what they're talking about? And I think, excuse the French, but bullshit can get called out pretty quickly if you ask a few questions as well over time.
Very true. Ryan, I'm looking for some tips now. So I'm going to put myself in the position of a first home buyer, but I'm a self-employed tradesperson and I don't have the first idea about, I guess, maybe best practice or the best way to prepare myself for a home loan. Have you got some tips you could share?
Yeah, without a doubt. So obviously it will come down to where you are in your financial position with, do you have tax returns? Do you not? Do you need to do a low doc loan? But for a lot of first home buyers out there, they're not actually aware that mum and dad can help out as well. And that's not with a cash deposit. That's with a lot of baby boomers, as we know, are equity rich but cash poor. So they have lots and lots of equity in their owner occupied property because when they were growing up, they were told, pay off your mortgage, pay off your mortgage, pay off your mortgage from their mum and dad. So they've paid off their mortgage, but they don't have any savings left over. But they've got a property that's worth, $700,000, $800,000, a couple of $1 million, depending where you are in Australia. And they want to help their kids out. So what you can actually do as parents and being a first home buyer is the parents can actually give a limited guarantee, and you can actually use that as a deposit. It's called a family pledge loan, where as a first home buyer, you actually don't need to try and save up the 5, 10, 15 or 20% deposit, which can take a very, very long time. And every time you think that you've just got that deposit, the market kicks again regularly and you're like, I got to save up again. So that's one really good tip. It's called a family pledge loan, where you can actually get mum and dad to use some equity in their property over a limited guarantee, which means just a limited amount, not the whole thing.
Okay, I got 5 kids. That's not happening, Ryan. I've nothing left by the time they all do what they got to do.
Well, the upside with that, so here's the upside. No money actually exchange hands on that, Nick. And then as your kid's property value goes up, they'll actually release that second or that limited guarantee.
Yep.
So there's no physical money that changes. And then once your kids have enough equity and paid the loan down a bit, you're set free again and you're ready for the next kid. And the next kid. Well, if you got 5 kids, you'll be doing it a few times.
It won't be happening. They're going to have to figure it out on their own, just like that.
Or we can go back to the days of figuring it out on their own. And then there is that other option as well, where you actually don't need a 20% deposit. You do need to be aware that mortgage insurance will be charged then for a first home buyer if you don't have a 20% deposit. And the mortgage insurance actually covers the lender, not the customer.
Mm-hmm.
However, we can explain that more in detail. But because the loan's insured, the customer gets to pay for that, not the bank. Wonderful concept, isn't it?
Yep.
It's so cheap. Must have been invented by a bank.
Yeah, correct. So for first home buyers, there's a couple of tips and tricks there.
Ryan, anything on the way I set up my business or how I pay for things that might make it easier or smoother? If someone's looking at a low doc or a mid doc and as a self-employed person, they want to repackage or refinance or buy a house or whatever that is. are there particular structures that are better, or is it better if I keep my business spending separate to my personal spending? Any of those sorts of things that might play a role?
Yeah, it's more around the actual business itself. So, no doubt being GST registered. Um, that's the first biggest tip is if you want to start to borrow money, you've got to be GST registered, because without being GST registered, you can't be making any more than $75,000. And as we know these days, under $75,000 is not going to get you too much in the lending space. So that's definitely the first setup. The other thing is as well is also, which comes down to the ownership. Obviously, sometimes there's multiple partners and those sorts of things as well. Is when you do set up a business, you generally got to have a 20% stake in the business or greater for lenders and those sorts of things to be able to deem that you are 100% self-employed. So if you've only got a 3% stake in a business, that's not really deemed self-employed in majority of the lenders' eyes. The other big piece as well is credit scoring these days. I'm not quite sure if many listeners do know or don't know. Credit scoring is where you make your credit card repayment, where you make your home loan repayment, where you make any form of credit repayment. It gets reported on your personal CRA or your personal credit report on a monthly basis. And if you don't make that repayment over 4 and you've missed it and it's greater than 14 days, that will actually affect your credit score, and lenders will be able to see that. So that's the other huge piece is your credit score these days goes a huge way into borrowing money.
Ryan, government over the last, 5 years or so, has certainly thrown a lot of grants or opportunities to many small business owners. Are there any particular grants, apart from the first time owners grant? I'm not even sure whether that's a state or a federal thing now, but are there opportunities for grants available to small business owners?
Not that I'm aware of down the residential space. Obviously, those grants and those sorts of things is the best one is obviously to speak to your accountant. Your accountant will be across what sort of grants are available for each business and each category of business of what you fall into. But as a greater, broader general aspect around the residential lending and home loan space, there's no special grants or anything bar that first homeowners grant, which you did bring up, Nick, outside of that I'm aware of.
And it's just so we're clear, is it available to everybody in Australia, the first homeowners grant?
So the first home owners grant, it does come down to of how much you're borrowing. If the property is new, there is state and federal. It does come down to which state you live in, to what grants available, what property they accept. Is it new? Those sorts of things. So again, speaking to an expert of where you are you living in it? Are you going to rent it out? Will actually then mean, are you applicable for a grant or not for a grant?
Got it.
Ryan,
that's why I keep saying speaking to someone who knows what they're talking about goes a long way, because every home loan and every person's financial situation is very different.
Absolutely.
Yeah. And it's money, like people just get so emotional about this stuff and probably a bit cagey as well, which leads me to a question that I'm going to ask, and nobody knows I'm going to ask this question. Nick and I talked recently about the podcast because we've been doing this for a while, over 600 episodes. And I've been asking the same question. This is how boring I am. I've been asking the same question almost every episode for more than 10 years. And we thought, you know what, after 10 years maybe it's time to change it up a bit, big fella. So we thought, we need to ask some pointier questions or something a little bit more interesting or controversial. And so I couldn't come up with anything at all, Ryan. So what I figured I'd ask you is...
I'm your guinea pig.
Yeah. What's the hardest question you've ever been asked by a customer, a client, a franchisee, someone in your business relationship? What's the toughest question you've ever been asked?
Well, we do get asked some hard questions, and obviously that's evolved for me over time as well, from writing home loans to being a business owner to now again quite different of having 40 franchises as well. I think generally a lot of the time, which is it's more of the harder questions of being able to explain it sometimes of how you grow a business from scratch to a large scale sort of business. I think it's a hard question because there's so much in your head that you want to blurt out, but you can't blurt it all out in 20 or 30 seconds. So the other one too was from a 75-year-old grandma who asked if I was single or not. So that was a hard question to say that I'm not.
What was your answer, Ryan?
Well, I said if I was if I was a little bit younger, trying to make her that she was the younger one.
Trying to flatter her.
That maybe one day.
Oh, that's hilarious. I'd really like to know what a 75-year-old Nan was doing talking to you about home loans in the first place.
Well, that's what I wanted to know too, and she didn't have any property either. She just decided to pop in for a chat.
Oh, that's hilarious.
Seen you around town, mate.
Yeah, must have. No,
been stalking you for a while.
To be honest with you, that's generally one of the harder questions of growing a business, because it's hard. It's exciting, but it's hard growing a business. There's lots of ups, there's lots of downs, there's lots of investment, and every single person on this podcast would certainly know what it's like being self-employed.
What's been one of the hardest periods for you in your business, Ryan?
COVID. COVID was the hardest part. So Rate Money's been going for 5 years in July. And we've grown exceptionally to over $8 billion in customers. We have over 6,000 customers that we've done finance for as well. But when COVID first hit, it obviously changed for everybody about 6 months or 5 months down the track. But when it first hit, the world was ending. So funding lines were getting stopped, home loans were getting stopped. I mean, the whole market went into a meltdown. And we were a relatively new business, and that was a lot to navigate. But it made us fitter, stronger, a lot bigger, and those sorts of things. So that was one of the hardest times. And then obviously in recent times as well, with interest rates going 13 interest rate rises in a row, that's certainly been another turbulent time.
Picked an awesome time to start a lending business, mate.
Oh, it's great. Yeah.
Remind me to take you to the Melbourne Cup next time.
Yeah, I'm actually
You're obviously great at picking winners, mate.
Yeah. I'm actually 21, by the way, too, or I've just aged quite a fair bit over.
Everyone's going to have to flick over to the YouTube channel now and check out Ryan.
So, yeah, but I mean, I love challenges. I think that's the other thing is anyone being self-employed, you can either take a challenge on head first, or you can stick your head in the sand and hope that it all goes away. Well, sticking your head in the sand's not going to make it go away. You just got to take it head on and plow through and be able to adapt.
That's good advice, mate. Coxie, you got any weird questions you want to ask?
No, I was just going to say it's solid advice. And I think having a solid team to support you through business is the solution for many of the problems that we stumble across when we're in business. I think, we talk often about the strength of your team, and having an entire team. One advisor or one professional is never enough, particularly as a business owner. I think there needs to be a collection. We need great brokers for our insurance, for our finance. We need an excellent accountant. We definitely need business coaches, particularly ones like Warwick and I. But there's a bunch of other team members you should have on your team as a business owner. And I think, Ryan, you've just spoken through today as I was listening to you. It feels to me very much part that your process is very much about getting to know the people that you're working with so that you can help them find the right product for them.
Without a doubt. And you're 110% correct is, a team is what makes a business. It's not one person. So knowing what your strengths are and what your weaknesses are, you don't have to be a guru at everything. Stick to your lanes in what you're good at and hire good people around you to make you look even better again.
Yeah, I'm certainly not going to go and try and find my own mortgage anytime soon.
We can help you out there with a couple of local offices up there as well, Nick.
Well, I'm sure you can, Ryan.
I'll never miss an opportunity.
Well, to be honest, mate, it's part of getting through stuff like COVID and the interest rate rises for your business. Obviously, been pretty significant, and for tradies in business as well. You know, COVID was a boon for many, but then it became a massive nightmare with all of the materials shortages and cost increases, and people stuck in fixed price contracts, and not able to deliver on jobs because they couldn't get materials. So, what looked like being a purple patch turned out to be a wasteland, and then interest rate rises. And yet there are still trade business owners out there right now who are absolutely crushing it, and some who are, doing it tough, and they got their head down, their backside up, and they're doing what needs to be done. And a bit like you said before, Ryan, they'll be fitter and stronger as a result of these times. And then when we do have the odd purple patch here and there, they'll still be there to clean up when some of the other operators have fallen off. So I think.
Yeah, I agree. I also think as well is for the small and medium-sized business owners out there as well is we tend to get stuck in working and not looking after ourselves. And then you got physical fitness and you got mental, which is financial fitness as well. And sometimes we feel like we're just treading water. I really do suggest for all business owners too, which I'm sure that a lot do, but the ones who aren't, is take a bit of time out, even if it's 3-4 hours once a month, to actually look at your own financial position and helping everybody else like you do on a daily basis to see if there is something that you can do yourself personally to give yourself a little bit of breathing space as well. It goes a long way mentally on top of just a financial stress as well.
Good advice. Right, Ryan, I'm sure there'll be some listeners who have learned some stuff from this episode, and there might be a few who are motivated to go and have a look at what they could do with their van loan or their business loans or something. Best place to find you guys?
So Rate Money website, so www.ratemoney.com.au, or our free 1300 number. It has all of our local offices there, so you can either call through to us and we'll put you in contact with the local franchise, or if there is a local franchise around the corner from you, as you said, we've got 40 locations around Australia. Feel free to give them a buzz directly, and I'm sure they'll be very willing to help you out as well.
Nice. Well, thanks for your time, Ryan. Good to talk about money. I think maybe some people will still be groaning about the thought of their mortgage and their weekly repayments, but as we say here at Tradies in Business, and certainly to our tradiepreneurs all the time, our clients, is you need to always be reviewing anything that you're paying regularly, and that includes your mortgage and your finance. You should always be reviewing that at least once a year, if not more often than that, particularly as times are changing. So get in touch with the Rate Money gang. I'm sure they'll look after you. Ryan, thanks for your time, mate. And all the best with the waiting for the next purple patch, mate.
Thanks, Wazza. Appreciate it.
Thanks, Ryan.
Thanks, Nick. Thanks a lot.